So the SPY ended up hitting our 687 profit target. Once the profit target was acquired, I closed out my swing trade on futures where I ended up buying last night at 6862, and then at 1:23 p.m. I ended up selling above 6900 for a 40 plus point move. And if you followed the overall game plan, you could have been buying at much lower prices from where I've gotten in at, and the market fully recovered from that dip and hit our profit target as expected. In terms of the power hour trading session, GROAR ended up calling out a 1000% profit return on SPX, and we ended up adding to that win, which doubled the gains. GROAR ended up going 2 for 4 on the day. I ended up going 1 for 1, a 100% success rate. We absolutely crushed it, and I'm going to be showing you the trades that we ended up making towards the end. Losing remains a personal choice, especially when you're making 40 to 50 plus moves on ES, and then you have SPX YOLOs towards the power hour trading session where you're making over 1000% gains every single week. With that being said, I'm going to show you the trades towards the end. First things first, we have to get into the newly updated price action analysis. The stock market is currently setting up for another futures trade. There's so many future swing trading opportunities heading into this overall week, man. There's been one every single day so far. We are currently setting up for another one. I'm going to be giving you the newly updated game plan, how to trade the best setups at the best prices, the key levels of interest on where we're planning to buy call options. We are still planning to be buying call options at oversold dips since the market is beginning to attempt to push higher. I'm going to be interested in buying at slightly higher levels. The previous levels of 683 to 680 have been the exact lows where I told you to buy call options for a very, very nice spike to 687 to 689. And the level for puts, where I told you to buy the only one in terms of the lower one, was 688. It was the exact highs. So, in terms of where I stand, I'm going to be raising overall buy entries. Our oversold levels are now going to be slightly higher as the market is beginning to attempt to break out and push higher within some time. And in terms of our levels for puts, going to be focusing on the same higher levels, but I'll be giving you some important new updates on those levels for puts, right? So we're focusing on calls at slightly higher oversold levels and then puts at our overbought levels, which I'll be disclosing everything towards this video. I'm going to show you how to determine and confirm if the trend maintains bullish, how to determine and confirm a break of trend, and how to determine where trend reversals are going to be, overall for put options, nice little trend reversal opportunities at overbought puts, right? I'm going to show you step by step how to trade the best setups at the best prices. Let's get straight into it. So, towards the end, I'm going to show you all the trades that we ended up making today. I went 1 for 100% success rate. I decided to only trade futures for the day. Last night, I disclosed this in last night's game plan. I ended up buying ES at 6862.25. I said in the game plan I was absolutely certain that this week, most likely tomorrow, which today, that SPY was going to hit 687, and once it does, that's when I'm going to begin taking profits. So once the SPY ramped up to 687, shortly enough, I ended up taking profits for a 40 plus point move on ES. I sold that at 6902. That's a 40 point plus move. And then in terms of the main trade of the day, I'll be going over the rest towards the end. This is what we do during power hour. 3:44 p.m., we ended up buying 6890 SPX calls for 150 cents. You can't name a single person on this planet who's buying these SPX calls at 150 cents and then adding to the winners at 200 cents when they're up 33% on the trade, and then selling at the exact peak when the contracts go to 1,000 contract, meaning you're putting in $150, one contract, which is actually the cost of our monthly subscription for Team Roar. And then you're flipping that one contract into 1,000 a contract, You're not going to find a single person on the fucking planet who's doing this every single week, calling out multiple YOLOs that are 1,000% plus gains. So G were absolutely crushed on the day as well, going 2 for 4. The 50% win rate does not matter because the wins are so big because the percentage gains could be 1,000% plus, and we add to winners, which doubles to triples our gains, and we set profit stops to ensure that we don't go green to red, especially when we're adding to our overall winners. We're increasing our gains without taking on extra risk because we're getting profit stopped out, moving our profit stops up higher to ensure that we don't get back the bulk of our gains when the market has a big move in our favor. I'm going to be disclosing the rest of the trades towards the end, but those were the highlights of the best overall ones and what we mainly did today. But in terms of the SPY, this is what you need to understand. I made it very clear that the market was having a break in retest, forming higher support, and it was in a compression channel signaling where the market would push back up to 687. One of the advantages to making swing trades is you don't have to necessarily time everything perfectly, especially depending on what contracts you select, what asset classes, you know, um, your overall trading, right? Because in terms of micro price action, that can flip very, very quickly. And in terms of swing trading, well, you have enough time in certain situations where you don't have to be 100% spot on in terms of the overall timing. But the ES trade ended up working out absolutely phenomenal. It had a 15-point plus spike. I didn't take profits because I was aiming for the bigger move, and then it flipped red. I held it, and then shortly enough later on to the day, SPY had a massive spike like we were expecting to within some time. And then I ended up selling for profits once it hit 687, which was my main overall short-term profit target, right? So in terms of where we are at right now, as you can see, the market has proven that it's formed a higher floor, right? Your previous resistance, your previous break and retest levels were right around here. Market had a nice breakout, attempted to form lower highs, which ended up being a sideways compression channel for the market to attempt to break out. Surely enough, it pumped up once again. And we have all this higher support at 683, right? So we have higher support forming at this break and retest level zone. The market used to drop back down to 676. Now it's forming higher support at 682, 680 to 683. If you go back to the videos earlier this week, I made it very, very clear that our only interested levels for calls were in between 680 and 683, and then anything below that. We were interested in buying calls at the oversold levels like we did, which is why both of my ES trades this week ended up going up 50 plus points each. And we were only interested in buying puts at 689. So I just genuinely don't see if people use the right, if they size in accordingly, they select the right contracts, they hold the trades, even if they went and read it first and didn't time it accurately, right? If they just held the overall trades and sized in accordingly and sold at our profit targets, they'd be green every single fucking time. All the buy zones worked, all of the put zones worked. And in terms of the updates, the market's breaking out and retesting. It retested the high of that compression channel, which I explained to you was the most likely outcome this week. And now you guys need the update in terms of, well, are we going to break out now, or are we going to kind of like chop a bit? So there's two potential outcomes. This is what I'm going to say. There's, in terms of the two outcomes that we're sitting at, I'm going to explain to you two outcomes, and then I'm going to explain to you the most likely outcome, and I'll actually explain to you how to determine which outcome is actually going to work, right? Which one, on how to actually determine what the fuck's going to happen. So in terms of our two potential outcomes, this is what I have to say. The market isn't setting up for some sort of massive crash. We are not setting up for a massive crash. What we're actually setting up for is a bull and a bear trap. This is one of the potential outcomes, meaning once we go back up to 690, a trap could get created. But you need to understand, even if the bulls get trapped and we have a nice little pullback at 690, which could happen and is realistic. And again, I'm going to explain to you towards then how to determine and confirm which outcome is going to happen, right? So I'm going to start this off with the two outcomes, then we're going to dissect the chart, and then you'll know which one is going to happen if you stay towards the end. If you don't stay towards the end, you're not going to fucking know. So, anyways, 690 is a strong level where the market will attempt to drop first. So, one of the outcomes is the market drops at 690 and then it bounces at our new higher oversold level, right? So, a bull trap and a bear trap. Now, if it does drop at 690, it's not going to fall off a fucking cliff. It drop a couple points, then bottom at our new higher level for calls, right? Our recent highest level for calls was towards 683. That was our higher one, and then our lower one was 680. So I'll give you the update on what that new higher level is shortly. But just understand, one of the outcomes is going to be the market is going to try to drop at 690 towards this level, and then it's going to try to bounce at our higher oversold level. So nothing but a bull and a bear trap, and it will attempt to close kind of in the middle or kind of bearish if that occurs, if it tops at 690. So you can write that down. Now, our second outcome is this. And one thing you need to understand is, not saying it's going to happen tomorrow, but what I am saying is, with absolutely certainty, within some time, this is going to be roaring above 690, you know? And once this roars above 690, that's when we're really going to start to enter these overbought levels where we wanted to buy puts. If you follow the game plans, you guys are well aware that our lowest level to buy puts was at 689, which was the exact peaks. I did not recommend any lower levels to be buying put options. So what I do is I steer people not in the right direction, in the best fucking direction. And those puts were literally bought at the exact peaks. G-Roar crushed that twice for multiple 100% profit returns the day before yesterday. And you know, when the bull trap was created towards the 689 gap close reversal level that I called out the day before. So what you need to understand is, within some time, the market will absolutely certainly be breaking above 690, and then it's going to go towards our overbought levels, and then we'll be eyeing puts at our overbought levels. So in terms of like first, what is expected in terms of first it's going to try to drop at 690, and then from there it's either going to bounce at our oversold level, or it's just going to keep on climbing higher, and it's finally going to roar to the next move. And I'll explain to you how to determine what the fuck's going to happen. So without a doubt, this will try to drop at 690, and this will try to keep bottoming at oversold levels if it does pull back, and they're going to be higher, not our lower previous ones, going to be updating that. And then within time, we will be roaring above 690, right? So those are all the things that are supposed to likely happen, right? But like I said, within some time, with absolute certainty, we will be going above 690, you know? So for motherfuckers trying to buy puts and go short at 690, they got to be a little bit careful, right? So now what I'm going to try to do in terms of the rest of this video is I'm going to give you the most micro price action plan where you have a better understanding in terms of timing, right? So what do we know? We know the market's going to try to drop at 690. We know that there's going to be higher levels to be buying calls, especially if it does drop at 690. And then we know within some time that the market's going to rally above 690 and go to that. We know all of that with absolutely certainty, right? Now, one thing we could say as well, you know, if the market is gonna within time go above 690, then even if it drops first to 690, we gotta be a little bit careful with those puts, especially when we could be buying puts at much higher levels, right? So this is where it's gonna get very important, you know, in terms of this video and game plan for day traders in dissecting the short-term analysis. And this is where it's really gonna give you a better understanding on what's gonna happen right now, right? So I explained to you, you know, three things that are likely gonna happen, but what's gonna happen right now? I mean, I did explain like, you know, it's likely gonna drop first at 690, and then from there, very, very unlikely that a massive bull trap, like a nice little bull trap, could happen, but not a massive one, not like a massive crash. It's going to try to recover at a slightly higher level, which I'll be giving you. And then within time, we push above 690, right? But the key is you need to understand timing. You need to understand the best entries. You need to understand the confirmations to look for. You need to understand the patterns, right? So, in terms of our daily chart pattern, the market's breaking out, it's retesting, it's forming a higher support. We're no longer bottoming, guys. We're no longer bottoming at 676. We're forming higher floors, higher support at 682. You understand? So if you look at the big fucking picture here, it's crystal fucking clear. And this is why my trades work out so fucking well, because we know exactly what the fuck we're doing and how to see the market. So if you look at what's going on, the market's no longer going back down to 676, 676, 676. It's breaking out, and some might say, oh, it's forming lower highs. That's bearish. This was your previous support. It's topping at 689. It's no longer going back up here, no longer going back up here. But all it's doing is forming a compression channel where it's actually forming higher support, you know? So with this crunch of the higher support, it's gonna try to propel the market to the fucking moon and break out and spike, like I stated in last night's video, you know, leading you the absolute best direction to be buying those calls and buying ES at our lower oversold levels. You know, for anyone buying puts in the market, if they just would have used my levels for puts, they would have been green and buying at the exact peaks and the exact highs. They didn't hit, they didn't, the levels, you know, took some time to hit. It took some time to get there, but all the trades worked. If they just set price alerts, they would have been green every fucking time. Losing is genuinely a personal choice with this information in this game plans. So, you know, markets forming higher support. We got a green, red, green, which is a bullish confirmation. We got a green trend reversal. And in terms of what this green trend reversal signals, it actually signals two outcomes. And in terms of the two outcomes that it's signaling, you know, this green trend reversal candlestick nearly at the same level right here. This green trend reversal candlestick nearly at the same level here. This green trend reversal candlestick nearly at the same level here, right here. This green trend candlestick, right? So this is what it's signaling. It's signaling two potential outcomes. We top towards 690, right? And then pull back and then bottom at a lower level. Or we just have a small little pullback and then finally break above 690. That's what it's signaling. Now, what I'm going to explain to you is, and just again, with no matter the fuck what, the best thing you can do is buy fucking calls at oversold levels. All you have to fucking do to be green is just to keep buying these fucking calls at oversold levels. Every time we buy these fucking calls at oversold levels, this shit works. If you just hold the fucking trades, you don't even have to time it perfectly. If you just hold our fucking trades, hell, if you don't know what the fuck you're doing options, just you could just buy fucking ES. Just buy fucking ES and hold it. Dude, this shit always fucking goes up. This ES is a fucking jailbreak to literally make free fucking money doing absolutely fucking nothing. You don't even have to time the shit fucking accurately. My trade was up 15 points. The shit dropped 20 points. I didn't even give a fuck because I knew if I just held the trade, the shit's gonna fucking fly straight the back up. If not today, then this week. And shortly enough, at the profit target hit, and I sold for another 40-point move, just like I did the day before. It's so fucking easy. You don't have to time fucking shit. Like ES is literally the easiest thing to fucking trade. So, anyways, you know, In terms of where we're at on the micro chart, so I explained to you the higher support, the green, red, green market's bound to break above 690, but first it's going to try to drop towards previous day highs to 690. So look, let's take a look at 30-minute patterns and let's take a look. So looks like we got this little W forming, right? So take a look. You see like this like W, right? You see the W. It's all we do is win. W, William, winning, W's, right? So it looks like a W. You see like this W forming, right? It looks more like a W if you kind of like zoom out of it. And yeah, so let's like zoom out of this, like right here. It kind of looks like a W. So we got this like W forming, markets breaking out, retesting, forming higher, right? So what the fuck does this mean? Well, we're forming a higher channel, we're forming higher support, which is basically saying that these lower highs are fake as fuck, and these lower highs are nothing but a fucking trap to just fuck all the fucking bears who keep on trying to short this at 689. It's like, dude, we already nailed the short at 689. You understand? Like, it's all documented. It's been real time documented for years and years and years. We've already nailed the puts. You know, this is what we did on puts when SPY closed that gap. If you watch the game plan where I put in the title that the market was going to crash at 689.50, this is what we ended up doing. You know, 682 puts for 50 cents, 680 puts for 50 cents, and then both of these trades, 50 cents to 260 cents. There's your 500%. 50 cents to 170 cents, there's your 300%. So it's like we've already done this, dude. We've already done this. We know it can happen one more time, but it's not going to be on a larger scale. The market will have, less of a big pullback, and then it's just going to recover again to push fucking higher. So it's like we know what the future is. There's some people that they just know. There's other people like, oh, there's no way to tell where stock is going. Well, I'm like, well, I've been saying with absolutely certainty these profit targets are going to hit, and I've been making trades, and they've all been fucking working. So I would say they're just not on the shit that I'm on, because with absolutely certainty, I know exactly what the fuck's going to happen, and I know how to time it accurately. Not that I have to. I don't even have to time it fucking accurately. I just have to create a system that allows me to not time it accurately, allows me to hold the trades, allows me to take the risk that I want to take without proper timing. It all comes down to systematics. But with absolute certainty, like the market will try to drop at 690, and oversold dips will remain the best thing that we can absolutely do if we were to just literally just go the fuck in on trades without confirmations. But regardless, it's just the best thing regardless, because within time we're going above 690. So within time, if we're going above 690 and at worst we have a small little pullback at 690, the most logical thing we can do is buy calls at an oversold dip, because if it tops at 690 and then drops to a oversold level, which is going to be higher now because of all this higher support and bullish confirmations, it's going to break out and push higher any fucking ways. So if you're looking at the true picture of the overall trend in terms of if you were to just buy a trade and hold it with ease and make a fuck ton of money and not even watching it, the most logical thing you could do is buy calls at our new oversold dip levels, which I'm going to be disclosing, right? So if you look at the pattern's a W. And when the market forms the W pattern, as you can see right here, we got the W right here. You see the W? This is the W. It has a pullback at the double top of the W, and then it bottoms at a break and retest level, and then it pushes higher, and then it bottoms at the previous highs, and then it pushes higher, and then it fucking rallies like fucking crazy, right? And then this is the opposite of the W. You flip the W upside down, you got the bearish M. You see the bearish M? Got the M, right? This is the bearish fucking M, right? Some people might see that as a W. They might look at this and be like, oh, it's a W. Like, nope, nope. This is a fucking M. It's a fucked up M at the fucking peaks of all time highs. You got to be able to see it through, W's are fucking lows like that. M's are fucking highs like that, right? And to make some motherfucking M's, you need to be buying calls at these motherfucking W's to get your fucking W's up. Losing's all a choice. Everything I say is gonna happen. Just fucking do what the fuck we're saying, and you'll fucking be green every single fucking time. So the market's forming a W. It's gonna try to have a small pullback. The best thing we can do is buy calls at oversold levels, our new higher levels, and within time, we will be going above 690, but it will attempt to drop first. But regardless, it's going to fucking happen. So if it doesn't fucking drop first, it's going to go above fucking 690. If it does drop first, it's going to go above 690 any fucking ways. So if you do the fucking ROI, the best thing you could do is buy and hold fucking calls and give yourself some fucking time, man. But look, let's dissect this to give you the most accurate trading information in terms of fucking timing. And like I said, you could have strategies and systems where you don't even need timing in your favor. You could just buy calls further out. You could fucking swing trade. You could buy fucking futures. There's so much shit you can do. Like on certain trades, it'll actually make sense for me to get in on futures first and then make options trades later on, Like so many of my game plans have been playing out during the futures hours trading session where it's like, I don't even have a choice. I genuinely don't even have a fucking choice. It's like, dude, if I want to trade my game plan, I have to make a trade on futures. Options aren't open during that fucking time, you know? And it's so fucking simple to trade these futures because if you just hold these fucking trades, they always fucking print. I haven't had one futures loss this fucking year. Last year, I only had like one fucking L. They were all fucking wins. I had like 30 fucking wins on futures. I only made like 30 fucking wins on I only made 30 trades on futures last year, but that yielded to fucking over 1,000 plus points. This year, I'm already up 1,000 plus points. There's been so many futures trading opportunities. I haven't missed one of them. I've been waiting for the perfect confirmations. We're literally setting up for a futures trade tonight that I'm going to be eyeing very closely. But look, we got the W. Market literally already tried to drop towards 690, right? So with that being said, what's our oversold levels that we need to be eyeing? So right now we're at 688. Market's trying to have a nice little gap up. So what we need to do is, and by the way, these are all the levels where I told you to buy calls, literally right here towards the fucking lows. And then I told you once we go above 685, you need to be buying calls. Green, red, green, support for 2 hours, market pushed higher. Dude, if you're red, get the fuck out of the market. Just leave the fucking market. Like, dude, this shit works every fucking time. Like, every time I buy ES, it goes up 50 points. How the fuck are people red? Did they buy ES? Did they make the fucking trades? Like, SPX trade today went up 1,000%. If there was a 50% win rate, how is someone red if a trade's going up 1,000%? If you have 1,000% win and 100% losses, you should be green with a 10% win rate. And people think win rate matters. Fucking degenerates. So, anyways, this is what you need to do. You need to understand that we're the best and you need to listen. And if you don't listen, you're fucked. And if you're fucked, you shouldn't be trading because you're wasting all of your time and your fucking money. So this is what you need to do. If you do this, you're gonna love the market. You're gonna be green as fuck. You're gonna be like, dude, I should have just listened to this guy. Why didn't I listen to this guy? If you do the opposite of what we're saying, especially on the call side, and you're buying puts, you're fucked. You're absolutely fucked. You shouldn't be in the market. You should just leave the markets right now. So I'm gonna tell you exactly what's gonna happen. It's gonna fucking happen. And if you do this, you'll make a fuck ton of money. If you don't do this, you're absolutely fucked. So this is what you need to do. If you don't do this, you're fucked. If you're fucked, you should just click the fuck off this channel because there's no purpose of you watching these videos if you're going to lose money. That's not the goal here. The goal here is to make you shit fucking rich. The goal here is to show you that everyone else is fucking shit to make you the absolute best. So look, this is what you need to do. If you want to know what to actually fuck to do to make fucking money, your best level for calls is at 685. I've just given it to you. This is the exact close, the most prestigious, lucrative buy zone to be buying with in the market. It's 685. I've just given you the cheat code. Last night's game plan, I told you, once we go above 685, you need to be buying calls. We went above, formed higher support, green, red, green, support for 2 hours. If that's not enough confirmation at this break and retest level right here, resistance, break, retest, support for 2 hours, green, red, green. If you're not enough fucking calls around here, you're a fucking degenerate. Um, you know, but what you need to do now is you need to rebuy those calls, right? Because you should have been buying those calls today if you use the game plan, as you bought ES before that for another massive fucking win. It's like, dude, there's so much wins here that people can't even keep track of how much fucking winning we are because we're already on to the next win. By the time we had one win, we're on to the next one. Like, just to show you in terms of like what the fuck that looks like. I had a 50 plus point win on ES. And then if you just look at the power hour session, like, dude, this is what we do in power hour. Look, there was a loss during power hour. 6875 SPX puts for 135 cents. Oh my gosh. We entered these puts at 3:29 p.m. 135 cents a contract. The trade went to zero. But then the next one went up 1,000%. The next one, the same price, 150, almost the same price. And we added to it, and we added to the win, and we doubled the gains, and we're up 1,000%. And we're sitting here saying, dude, if someone's red in this group, they should quit. They should cancel the subscription. They should get the fuck out. Because how the fuck could someone be red with a 50% win rate if one trade goes down 100% and the other trade goes up 1,000%? And the trade that went up 1,000%, we doubled our position size on. How the fuck could someone be red? They should be able to be green with a win rate at fucking 10% at that fucking rate. And there was wins before that. We had a 688 call at 38 cents. Added to that, shit went to 80 cents, right? Do the math. 38 cents to 80 cents. There's another 100% RO fucking high. So losing's all a choice, man. All we do is win. All we do is print. The wins are always bigger than the losses. It was 2 for 4, a 50% success rate. And the wins were massive and the L's were small. Trade on puts, 100% loss, didn't add to it. Trade on calls, 100% win, added to it, double the position size, double the fucking win. 100% gain, 100% loss. You think we're at break even, but we're not because we added to the win, which doubles the gains, doubles the dollars. 100% loss, 1000% win, added to the win, double the gain. If you give all that back, the next day you're a fucking degenerate. That should be able to hold you for a fucking week. 1000% gain, dude. Let's have some perspective. This monthly fee costs 150, right? You buy one contract at 150, you flip it to 1000. You literally just made the fucking cost to stay here for fucking like what the fuck, whatever the fuck that is. 7, 6, 7 months, whatever the fuck. Who gives a fuck, right? Like, dude, that should be able to hold you for fucking the whole week. You just turn $150 into a fucking $1,000. You can't do that anywhere fucking else. You can literally make 9 trades. They can all go to zero, and then you can make one more trade. You'll still be fucking green. But we win all the fucking time. We keep L's small, and we keep the wins big, right? So the best thing to fucking do is to just blindly buy into fucking calls with a fucking blindfold on at 685. That's genuinely what I believe the best thing traders can do. It's just to blindly buy into fucking calls. That's what I would tell them. I'd be like, dude, you don't need a confirmation. Look, I'm so fucking confident on this. I'll auto buy it. And the reason why I'm so fucking confident on this is because I'm absolutely certain within time the market's gonna push above 690, and it's time to upgrade our oversold levels to higher levels. We're getting down to the wire of the higher compression channel. The market realistically can only have one more fake out at 690, and if it does have that, the best thing we can do is just get the fuck in on that oversold level, which is right here. So this is it. This is the gold mine. This is the holy grail. This is the automated level. Do you understand? This is household name. This is where I put my fucking money, my fucking balls, my fucking name on the fucking line, which is something that no other channel, nobody else is willing to fucking do. Nobody else is willing to sit here and say, this is where we're going long. You go long here, no confirmation needed. It's already confirmed. I have a system that works, and I will make the trade, and it will work the vast majority of the time. Nobody says that. Nobody says that. Everybody that shows you after the fact, they show you a recap after the fact. They don't do this shit live. Nobody does it like this, right? So this is the level, right? This is the level where if you buy puts, you're shit. If you don't know to buy calls here, you're shit. You don't know what the fuck you're doing. If you're not going long and buying calls at 685, you're fucked. All you have to do is buy it, set a profit stop, and you should be green 9 out of 10 times with an automated level. So this is our automated zone towards 685, right around here. It's a break and retest level, and it is our upgraded, strongest oversold level to be buying calls. So that's the free fuck you money level. That's the level where if you're wondering, oh, does this guy know what he's talking about? Well, that's it. That's the level. That's a household name level where it's going to absolutely work the vast majority, 9 out of 10 times. That's where I put my money on. That's where I put my name on. That's where I put my business on. I put it all on that fucking level. You are more than welcome to bet against me. You are more than welcome to sit out and not trade the best level. I mean, I think everyone should trade it. If you don't want to be smart and buy calls at the best level, then try to buy puts at the best level and see how that works out for you, which is the worst level to be buying puts on. But I think you would have to be an absolute degenerate to not make a trade at 685, you know? If you think it's going to be puts, if you dislike me, if you don't think it's going to work out, then just at least buy puts at the bare fucking minimum and lose your money. But if you want to actually win and you want to actually trade at the best level, then just buy the calls at 685. That's what I would encourage you to do. But I would say if you're going to sit out at 685, you're a fucking bitch. You shouldn't be trading, and you don't know what the fuck you're doing, because this is the best level to be trading at within the market. And if you don't make a trade at the best levels, then why even trade? That's what the fuck I would say. It's like, dude, if there's levels that are so easy, so simple, so lucrative, so profitable, wouldn't we all be better off just trading at those levels? Even fucking blindfolded, without indicators, without confirmations? Wouldn't we have our best possibility, our best probabilities to be fucking profitable if we just chose, right? We created a system chosen to just trade the best levels, the best setups, at the best prices. And the market's clearly setting up for a best price where we're in this compression channel, where at worst, we get a pullback towards 690, and then we get a nice little drop towards this 685, 686 range, and then we go straight the fuck back up, and then we begin to break out above 690, or we break above 690 first, has a drop slightly higher, and then it recovers and pushes higher, right? But regardless, when the market hits 685, I strongly believe we need to all go long. And the beauty of buying at 685 is we don't need it to go back to 690. All we need is a bounce. If we buy a 685 or a 686 call, right? All we need is a small bounce. The calls go up. We set a profit stop. Losing is a personal choice. If you enter a trade and the trade is green, losing is a personal choice. If you enter a trade and the trade is green, green to red is a personal choice, you know? We can all sit here and be delulu if a profit target is going to hit or not, but you need to have a plan of accordance of making sure that you don't flip green to red. And if you're already green on the day, then if you want to, you can sit here and say, you know what? If my profit target doesn't hit, I'm okay with going green to red on this trade because I'm already green on the day. Know the difference. But regardless, I am absolutely certain 90% plus of the time this is going to work. Or if you just went long at 685, whenever the fuckity fuck, it fucking happens, that you would make money. Not saying it's going to go straight back to 690, but I am saying is it should fucking bounce within time. I do think it's going to break above 690, but it should bounce. It should bounce without a doubt at 685. It should bounce nice enough where you have a nice gain and you get out for profits. You set your profit stops. You move your profit stops up higher to ensure that if it has a big pullback against you, you get profit stopped out where you moved your profit stop to, not where you originally set it to. So you keep the bulk of those gains and you should leave some runners on the trade. I would say to aim a little bit bigger, try to hold a little bit longer at 685 because it's the best and the most unreal level. And also, we're in a compression channel where the market's on the verge of breaking out. It's also on the verge of having a nice little small little bull trap if you want to try puts one last time if we get the best confirmations towards 690, right? But overall, it's saying that even if we get that bull trap, even if we get that drop, within time we're pushing above 690. It's just a matter of fucking time, right? In terms of most likely outcomes are expected to play out where the market will attempt to drop at 690, and then it's going to have a bull rally and break above 690 if it drops first. And it's either going to be at 685 or this is our last level right here. You need to keep your eyes on this. So we got the previous closing price at 687.35. This is going to be our middle higher level for calls, right? 687.35. 687.35 is going to be right there, right? So as you can see, we have resistance during extended hours. The market had a breakout. It retested, trying to form higher support. So the point is, once this is tested during the normal trading hours, the market's going to try to have a gap close reversal. So if the market gaps up above this and comes back down to fill the gap, if it's reacting bullish, we're going to be buying at the higher level, you know? And if it drops to the lower level, we'll be buying much higher in different contracts as well at the lower fucking level. Make it all back and more. Hold both trades. They'll both likely print. Not that we need them to. If you can't be successful with a 50% win rate trading 0-day options, you are not winning big enough, you are not holding long enough, and you are not adding to your winners. That is what you're doing wrong. So, what I want you to think of is this isn't our best level. This is the make or break middle level. That's what it is. You know, best thing we could do is just buy into calls at 680 fucking 5. If you bought here and you lost money somehow, and then you bought here and didn't make it all back and more, you don't know what the fuck you're doing. That's what I would tell you. And if you're not good enough to where you can't be successful at a 50% win rate, then dude, just fucking buy at the lower level unless you're absolutely fucking certain that this higher level is going to work. One of the best ways to be absolutely certain if a higher level is going to work is to actually wait for it to have a massive move above it, then drop back down and react bullish. Or this is even better because the market could have an oversold drop. Just wait for the market to hit the best level. And then when it bottoms at the best level, wait for it to react bullish, right? So if you want to know when to buy calls at fucking 687, the most logical way to do it is the market could potentially go back to our best level of calls, which is at 685. Meaning if you buy at 687, it could try to drop first, right? So what you do is you wait for it to go back to 685. And then if it starts breaking out and forming higher support at 686, then we start breaking above 687, forming higher support, reacting bullish, green, red, green, green, red, green, green, red, green, higher support, holding for hours, right? Then you buy it instead of just buying initially, or instead of buying into a break and retest where it has a massive break above 687, goes to 690, drops back down to 687, but it still didn't hit our best level, so it could potentially hit our best level, meaning if there's a bullish confirmation at the middle level, well, it could potentially go back down to the lower level. So that's one of the best ways to do it. One of the best ways to do it is if the market could easily show signals of gravitating back towards our lower level, best thing is wait for it to the lower level, buy calls, and then once it reacts bullish at our higher level after hitting that lower level, then buy calls at the higher level rather than just buying once it drops back down here after a breakout, right? Only do that if it's got the best signals, but just understand no matter what the fuck you do, if you buy here and you can't make it all back and more if you lost here at the lower level, then never fucking buy there and just genuinely you don't know how to fucking trade. Because dude, this is the free money fuck you level. If you want to do what's right and you want to make a fuck ton of money, just literally buy it right here. And you will be shocked on how well it works. You'll be like, dude, how the fuck did that shit work out so well? When the market goes back to 685, it's gonna rip fucking instantly. I can say that with all the confidence in the fucking world because, dude, I know exactly what's gonna happen. Some people just know things, you know? And I fucking know. I'm absolutely certain. You know, if people just bought ES when SPY was at 685, oh man, they'd fucking print like fucking crazy. I'm like, dude, the shit that I say works the vast majority of the fucking time, and I know how to manage my risk. So I'm gonna keep on fucking saying it. I'm gonna keep on fucking doing it. It just fucking works, man. So in terms of, other levels, we got 690. What you need to understand about this is the market is going to try to drop first towards 690, and it could also try to drop first towards previous day highs. So I would say like 689 to 690 is going to try to drop first. But when it all comes to show, just understand this. So look, if you're seeing bearish confirmations, right? If the market is sitting towards previous day highs, 688 mid, but I really like the higher level at 689 to 690. But look, in between this zone, the market is going to attempt to drop first, which is what I would like to happen because I really want to buy these fucking calls at 685, right? But this week, it should drop to 685. If not, then fucking go to 695. We'll get it next fucking week, you know? But, anyways, look, this zone right here, market is going to attempt to drop first. So if it's reacting bearish as fuck, you could try put, just be extremely careful, you know? And the reason why I say that is within time, we're going above 690. But look, a very realistic, if we're talking realistic outcomes, a realistic outcome is that the bulls do get trapped one last time, but they don't get trapped as big as a scale. You know, previously when they got trapped at 689, we went all the way back down to 680. So what I'm telling you is a realistic short-term outcome is they do get trapped towards previous day highs, 688 to 690 zone. But we don't drop back down as low as we did. We form higher support and bottom at 685. Then we push higher, or we just push higher first. But either way, in terms of what we know, 685 is the best level for calls. And realistically, the market could have one last bull trap before pushing higher before this breakout, right? So if we just buy at 685, whether it breaks out first and we miss it and happens later on, it should still fucking print. So, dude, if you want the free money, fuck you play. Just buy these motherfucking calls at 685. You're gonna be in fucking shock. You're gonna be like, dude, no wonder why this guy said 685 a million fucking times because it was gonna work. And he wants to make every single person watching this video fucking money so they can keep on printing, dude. Trading's about printing. You gotta print 24 fucking 7. So, best thing we could do is just buy at 685. You do that, you make money, use that money, you join our group, you get in there for fucking free. With some of the profits you made, you make more money. Flip it into fucking SPX, run up 1,000%. That's what you need to do. You need to be buying at 685. If the market's reacting bearish, for all of you motherfuckers who want to buy the puts, look, just understand. Short term, it could have a little bull trap and then we recover at 685 and push higher. Or it could just go right above 690. But it's really going to attempt to have that bull trap first, fill the gap, and then bottom in between the gap 687 to a best level 685, but focus on it 685, right? So for all you motherfuckers who want to buy puts, if the market's reacting bearish towards the previous day high to 689 to 690, I'm seeing signals where it could top at previous day highs. It could also top 2 points above previous day highs towards 690 in between that zone, right? If the market's reacting bearish, you could try to ride it back down to fill the gap. It's going to try to bounce at the gap, and then it might try to go a little bit lower to 685. So you can attempt it, right? Just be careful because within time we will go above 690, right? But see, that's what you need to understand within time, because realistically, the market could have one last drop. Then it finally goes above 690 after bottoming at our lower level, rather than just blasting right the fuck off to 690. One last little bull trap, shake out the weak hands, and then all the degenerates who don't see it coming, this is where it's gonna fuck their brains. It's gonna fuck their minds. If the market drops at 690, There's going to be a lot of fucking degenerates. They're going to be all happy and shit, right? They're going to be like, oh my gosh, it's going to tank. It's going to go to 680. It's going to fall. It's going to bottom in the middle of the channel and then it's going to go right back up, right? Motherfuckers aren't going to see it coming. It's like, dude, I see this shit coming a mile away. I saw the vision. I saw it. If the market tops at 690, I know that we're going to bottom at the middle of the channel. We're not going back down to the lower channel, right? So we're going to bottom at the middle of the channel. Then we're going to fucking finally break above 690 if it didn't break above it already, man. That's what I would prefer to happen. I would fucking prefer that. But it's like, dude, I with what I have, I don't even have to know what the fuck's gonna happen. All I have to do is buy at 685. That's what I would say. Based off of everything I just fucking said, all I have to do is just wait for this to drop to 685 and just go long. I don't have to worry about trying to buy to break out first to 690 or buy to puts at 690 for the little bull trap. I don't have to worry or think or care about what's going to happen first. I really don't. Because I'm absolutely certain whatever the fuck happens, I have most likely outcomes. The market will most likely try to drop and then recover, right? It's just that's playing with some, that's short term fire, right? But from a macro perspective, we're definitely going to be pushing above 690. So if you bought right here, it could go to 685, but within time, it's going to go above it anyways. If you bought puts right here, it could drop, but within time, it's going to go above this anyways. So what we do know is it's going to push higher within time. So if we just go in alignment with that and just wait for an oversold dip, it's like, dude, we could just put on the blindfold, push a fucking button, and just hold that motherfucker with ease. Right now, you're playing with short term fire. The short term fire says it is going to try to drop first, right? And it's also saying it is going to bottom and rally straight the fuck back up by the day after, right? So just to understand, there's two outcomes that could happen for the short term. We rally above 690 finally, or we have one last bold trap, and instead of bottoming at 680, we bottom at 685, right? And then we go above 690, right? Like in terms of absolutely certainty, I'd be very absolutely certain that if we went back to 685, then we're fucking rallying 690 rather than we're just rallying straight to 690 right now. But look, we need to focus on one last 30-minute pattern here. So we disclosed the W, and basically the W signals, last time we had the W, it did signal a nice pullback towards the double top and then a crazy bullish breakout recovery, right? And that has happened multiple times. So right here, we had a fucked up W. This one's more fucked up. Towards the double top, nice pullback, and then recovery. So look, with absolutely fucking certainty, this is what I would say the most likely outcome is. The most likely outcome is we drop in between the previous day highs to 690, right? And then when we do drop, it will try to go below 687 and it should bottom at 685. Oh, and when it hits 685, we will be waiting for the bullish confirmations. Look, I'm just gonna get in and hold. When we go to 685, I'm getting in that motherfucker and I am holding. And then look, I'll give you the map. So look, market's gonna try to drop first, and that's what I would prefer to fucking happen. Do I give a fuck about going short or buying puts? I really don't. I could give a fuck because, dude, the W pattern is signaling that all this drop is a short term drop for a short term bull trap and then the ultimate bear trap where the bears get squeezed into fucking oblivion, just like they did at my levels. If you watched the videos earlier this week, I told you 683, 682, 680, 679 best levels for calls. Dude, I gave you the exact lows of the channel and I told you puts at 689. There's not a single person in fucking existence who's telling you what to fucking do the way I'm telling you how to do it. They just can't do it like me, dude. They just can't do it like me because they're not me. They can't replicate it. It's unfucking replicatable, dude. The shit I had to do and go through to figure this shit out, oh my gosh, people would not be able to wear the fucking shoe. The shoes aren't fucking meant for fucking them. This shit is like, this is one in a fucking trillion, the fucking shit I'm on and doing. So, anyways, 680 fucking 5. We need to all go long. That's what we need to do. We just need to go long at 685. Man, it's like I'm so fucking confident in this. I don't even want to give like a break of trend analysis. Like I really don't. Everything I've been doing has just been working out so spot on to a fucking T. And it's like, dude, we still haven't hit these overbought levels where we wanted to buy fucking puts, right? So market tries to drop first. If it reacts bearish, you do what you want. If you want to go short and buy puts, just understand quick drop, then bullish recovery to push higher. That's what I would prefer to happen. You do what you want. It's your style of trading. It's your preference. You know, if anything, it's likely just going to be like this, where if we top at 689, sharp drop to 685, consolidates, break, retest, bullish recovery. So look, these are our levels for calls. Look, this is the ultimate blueprint for calls. If the market reacts bullish at 685, you need to go long. I encourage to just automatically get in at 685 and hold that motherfucker, right? And you can give it a little bit of time. You don't have to get in right away. It's probably going to consolidate a little bit. You can give it a little bit of time for some green, red, green, some green bullish pins, green bullish third make house confirmations, right? Then our next level for calls, 686. Next level for calls, 687.50. Next level for calls, 689. So what I'm telling you is you buy calls at 685. It reacts bullish, you hold those calls, right? And then when it reacts bullish at this level, you make another trade and you buy calls at 686, right? But you got to wait for the market to bottom here first. Then when it reacts bullish right here and you make that other trade, you make one more trade towards 687. And then in terms of the grand fucking finality, where we finally have this parabolic breakout that we're waiting for that could happen this week, you know, once we go above 690, that's when we start breaking out like fucking crazy. So this is what I'm telling you to do. Wait for the market to go to 685. When it reacts bullish, go long. If it's continuing to react bullish, go higher, make more trades at lower levels. And you can still hold your original trade as you're taking profits. Every time you make a new trade, you should be taking profits, some profits on the previous one. Your second trade's at 686. Your third trade is at 687. Your fourth trade is at 689, which is what I would say your highest level should be for calls, right? But to follow the ladder that I'm giving you, what I'm telling you is it needs to drop to 685 first. Drops to 685 first, you go long. Reacts bullish at 686, you go long again. Reacts bullish at 687.50, you go long again. Reacts bullish at 689, you go long again. I'm not telling you to be buying calls at these higher levels right now. And the reason why I'm swaying away from that is because the market is going to try to drop to 685 within some fucking time. And who gives a fuck if it goes to 695 first and the least likely outcome plays out? Because it's going to go back to 685 anyways. And when it fucking does, it'll be even a better buying opportunity any fucking ways. More oversold. We'll fucking kill it on that. So at the end of the day, this is a price ladder. If one of the levels reacts bullish, we go up to the next level. If one of the levels reacts bearish, we go down to the next level. You trade the candles, you trade the chart, but I encourage you to focus on the information. And the information says we should be buying at 685 first. Then when the trend starts to reverse and react bullish, then we should consider buying at the higher levels after it bottoms towards 685 or slightly lower, and our higher levels will be 686, 687.50, and 689. Once we finally break above 690, ideally after bottoming at 685 first, because the market will try to drop first from 690. Once we bottom at 685, once we start breaking and retesting above 690, then we get a nice parabolic fucking spike. Now, let's discuss our higher levels for puts. So, in terms of our higher levels for puts, we need to focus on break and retest and strong resistance levels. So this is a break and retest level right here, 692. In and out scalp, the market's going to try to drop first. Once it hits 692, then it will try to push higher, right? So when it hits 692, realistically, we can drop back to 690. When it drops back to 690, you need to be eyeing calls, right? So when the market goes to 692, you could scalp a put. When it drops back down to 690 racks bullish, you could scalp a call, right? Then when we push back above 692, our next level for puts is going to be right around here. Let's dissect this. 694 to 600 and 90 96, 696, but our true best level would be 698, right? So this is what I'll say. Our absolute best level for puts is towards all-time highs, 698, nice keyhole round $700 number, right? And like I said, it's going to take some time. This more macro analysis. And then, 692, this is a very strong break and retest level for puts. And then when it drops 690 for calls, if it reacts bullish, then it breaks above 692 and then above 692. Keep your eyes on 694 to 695. Oh, yeah. Oh my gosh. Okay, look. These are your best levels for puts. So these are your best levels for puts. Break and retest right here. Oh man, this is fucking prime. This is golden. This is even more golden. I fucking love 692. Even though it's a lower level, this strategy is fucking perfect. It's break and retest. break and retest, massive sell off. Oh my gosh, 692 is prime puts. It should instantly drop back to 690 for a nice scalp on puts. I see what's going to happen before it happens, and then I know what's going to happen the other way too. I know when the market drops to 692, it's going to bounce to 690. I know exactly what to do beforehand. When the market goes to 692, I buy a put, take profits, and then I look to buy call at 690. I know what to do before it plays out. I know the most likely outcomes. I know where it's going to try to drop first, and I know where it's going to bounce after it's done dropping. If you don't know what's going to happen before, you don't have a plan. You don't know what the fuck you're doing. You're just trading off momentum. You're just trading off your frequency, emotion, past experience, which works and you can do it. But it's like, dude, I'm on the level where I genuinely know what's going to happen first, most likely. It's not going to work all the time, but I know the most likely outcomes. Like, absolutely certainty the market's going to try to drop first at 692 and then bottom at 690 and then push higher. I just fucking know that, right? Now, obviously, as the chart develops more and as we get more confirmations and more candlesticks coming in, things can change and things could shift, right? But I know right now with absolutely certainty, as the chart isn't as developed, obviously when things get closer, things can shift and change, views can change. But right now, with what we have in the game plan I'm making, I'm absolutely certain it's going to try to drop first here and bottom here. And then as time goes on, things can alter, things can change, but I'm always updating in real time and I'm always adapting. But that's where I stand right now. And then as we get closer to the trade, information can get more accurate or slightly change and I adapt, right? But that's very, very likely. And then 694, 696, you need the best confirmations for puts. I would say literally the lower level, 692, just get the fuck in on that motherfucker. And then this level's fucking prime, dude. This is a fucking gold mine. 697, 698, 699 fucking gold mine for put zone here, right? And then our call zone, dude, right fucking here. And then if it bottoms here, I'm really only giving you permission to buy calls if it fucking bottoms like right the fuck here, right? I'm giving you permission to buy at our higher levels too. 686, 687, 689, right? And then if we go to 692, you can get in at 690 if it reacts bullish, right? Now, I'm gonna add in one last thing. If we're just holding 686.50 to 687.50 in the market, goes to 692, hit the puts, then look to buy calls at slightly higher levels. I would say 687.50, right around there. That's only if we go to 692 first before going to 685. So that is the final game plan. Losing to personal choice. The market is basically signaling that within time we're going to be going to we're going to be breaking above 690. At first, we can have a sharp drop and then bullish recovery to breakout, or we just break the fuck out. So if we just break the fuck out, you can buy puts at 692 and 695. If we just crash, you can buy calls at 685, right? Simple as that. Those are your first trade ideas to make. If we just break the fuck out first, buy puts first. 692, one of your best levels, and 695 is fucking phenomenal. But that 692 looks fucking gold mine to get in and get out first. So that's it. So what I'm telling you, you don't have to predict shit. You don't have to do shit. Look, you don't have to sit here and say, "Oh, is it gonna? Are the bull's gonna get trapped here? Or the bear's gonna get trapped here?" Dude, what I'm telling you to do is you can just tell this level, tell this zone to fuck off. Obviously, if you're a professional and you wait for this shit to develop, you'll know what's gonna happen. But I completely understand that. There's a lot of degenerates, there's a lot of beginners watching this video, and they need to be handed the absolute easiest information for them to be so fucking easily green. Where it's like, dude, they'd be looking at what I said and how this shit plays out, and they'd be questioning if they were fucking red. They would know absolutely certainty. They'd be like, dude, trading's not for me because these trades are green, everything's working, but I'm still fucking red. I'm still losing money in the long term. That's just not for you. So what I would say is the easiest beginner trades you can make. We're losing genuinely a personal choice in terms of making a game plan at night before in advance. Buy calls at 685. If it reacts bullish, then buy calls at 686, 687. Right? First game plan. If the market breaks out, buy puts, 692, 695, buy the motherfucking puts, then calls, 687.50, 685. That's what the fuck I would say. You do that, you print. In the meantime, if you want to try to be a professional and do what the fuck we're doing, we're not just doing that. We're doing every fucking thing because we win 24 fucking 7. You can try to sit here and determine if it's going to break out first or if it's going to crash first, or you could just wait for it to crash first and buy calls, easy money. Wait for it to spike first, buy puts, easy fucking money, and then take it from there, right? And then if it does crash at 692, which it should, you buy calls at 687s, 685s. That's three ideas. If it does drop first, which it could, then you buy calls at 685, and if it reacts bullish 686, 687, boom. It's fucking six trade ideas. Three drop first, three go up first. You could just skip this part. You can just swipe next on this part. It's okay, guys. You don't have to make every single trade. You don't have to sit here and watch every single little fucking level and just analyze this shit and be like, oh, is it going to be a bull trap or bear trap? You can actually trade the best levels, the levels that are so fucking good where you know who's going to get trapped before it actually happens. You know, right now we see there's a clear battle, there's a clear fight, and there's also a fucking magnet at 685 for the short term that can hit. And then there's also a magnet within time that might not hit right away, very, very likely, right? Because there's a magnet at 685. That's why it's very, very likely it's not going to hit right away, but it fucking could. Things happen once in the blue fucking moon, which is why you can just trade the easiest beginner game plans. But you know, if the shit just fucking rallied above 690 instantly, it's gonna try to drop first any fucking ways and then go back to 685 within fucking time. But that 685 is the ultimate bear trap level where those bears will get fucked and squeezed into fucking oblivion. So guys, if you use this information and you're red, you need to quit. You need to walk away. Trade's not for you. It's like, dude, I'm giving you the most accurate information and game plans in the whole fucking market, man. So this is what we do. We trade cheap, low risk, far the money zero day options. As you can see, GROR, you know, we have a real time zero day options trading alert system. He ended up making 4 trades today. 2 were losses. They were 100% losses. The most we put into the trades is our max risk per trades. And in terms of the most we make, it's unlimited profit potential. You know, every single week we have 1 to 2 trades, we make 1,000%. It instantly offsets all the losses that we had, and we don't have a lot of losses. We have the highest win rate of the game doing this. Not that we fucking need it when you're making 1,000% returns and you're adding to those winners, which double to triple the gains, right? So the first trade in terms of options was a loss. And you know, you shouldn't bitch about it because the next one was a 100% win, which offsets the loss, but it actually makes you profitable with a 50% win rate because we added to the winners, which doubles the gains. And then after that, we had another 100% loss. But in that particular situation with a 50% win rate, you should have already been green. And if you're green and you don't walk away, the most you risk is half your profits. So even if you took this next trade, which brings your ring rate, which brings your win rate down to a 33% win rate, right? You shouldn't be red because you're already green on the day. And if you go green to red, you're a fucking degenerate. If you're not green enough, then don't fucking trade. If you have absolutely no fucking money and your green is enough, then you shouldn't be fucking trading in the fucking first place. Unless this is just educational fucking purposes for you. So 6875 puts 135 cents. This was 100% loss. But you're still green on the day with a 33% win rate if you chose to keep on trading. Obviously, if your account's that small and you can't take that trade, then don't take it if it's going to flip you green to red. Then the next trade, and the best time to trade is during the power hour. The power hour YOLO session, SPX extravaganza session. This is why. Look, 6890 SPX calls for 150 cents, right? So perspective. SPX puts for 135 cents, right? It's okay to have 100% losers because look, 6890 SPX calls. You see this? We adapted. We switched sides. We had a put. It was a 100% loss. It's okay. 6890 SPX calls for 150 cents. Look, hurry up, add to the fucking trade, add to the winners, expectation of going in the money, trade went in the money. As soon as it went in the money, look, it went straight to a fucking 1,000. 150 to 1,000. You do the math. SPX contracts are at 150 cents. The winner goes to 1,000. The loser at 150 goes to 0. It's a numbers game. This is why we win. Because the wins are much bigger than the losses percentage wise, right? Most you can lose is 100%. The most you can make is unlimited percent. You put in your max risk per trade, which is the same amount as someone puts into a stop loss, but we put in the max risk of our trade into cheap, low risk, zero rate option contracts, which means we don't use stop losses. We could just hold the trades, trade the trend, wait for the trend to come back to life, and then sell them deep in the money when the trend does come back to life. And if it doesn't, and we're wrong about the trend, by the time that happens, it's like, dude, we probably already hedged, or we probably made a trade at a much better level that offsetted the loss anyways, and we're adding to the winners, and the wins are always bigger than the losers, right? So wake the fuck up, join the group, and you'll start printing at the speed of light, and you'll absolutely love it. It's unlimited winning, it's unlimited printing, non-stop. Losing is genuinely a personal choice. So it's the first thing down below in the description. And as soon as you join the group, you should be able to make the cost to join the group, you know, instantly. And if you use my game plans, you should easily be able to make much more than the cost of the group before you join the group. So, you know, I put everything out there on the line. Like I said, you motherfuckers want to join the group for free? Buy calls at 685, buy puts at 692, right? Make those trades, get in here for fucking free, and then make more money. It's as simple as that. If you can't follow simple steps, this isn't for you. If you can't follow instructions to make money and to print and to trade alongside the best, this isn't for you. But if you're capable of buying calls at 685 and you're capable of buying puts at 692 and making money and learning and using these game plans to become self-sufficient, to make money, trade the best set of best prices, right? And then if you like to use a small portion of those profits that you made with the game plan, with the levels, join our group and get the best trades in the market because that's what we have. Trading is about trading, and everybody wants to know who is the best trades with the best asset classes to be trading. Far out of the money zero-day options are the toughest, system and the toughest trades to be making. You have to time them perfectly, and you have to have the right systems where if you don't time them perfectly, you're still going to be green. You also have the right systems where if you don't have a high win rate, you're still going to be fucking green. And the only way to do all that with unlimited options are far out of the money zero-day options. They allow you to hold trades as long as you want without taking on bigger risk. They allow you to add to winners without losing money because you're setting profit stops, which prevents you from going green to red. It also prevents you from, risking and losing more money if you're adding to wins because worst case scenario, you just get profit stopped out anyways. So listen, man, you guys need to get in here and you need to start printing. It's unlimited printing and it's unlimited winning. You're gonna absolutely love the group. Every single morning, you get access to key levels, where to go long, where to go short, updated game plans, multiple perspectives. You can plug in the key levels to your Thinkorswim charts, risk management 101 on our real-time zero-day option trading alert system. It's not just buy and sell trades. Where to get in, where to set your profit stops, where to exit. If you set your profit stops, you don't even know where to exit. It just exits you out automatically. That's the beauty of fucking profit stops. We don't even need to tell you when we fucking exit when we say we're in a profit stop because it just exits automatically. If you're green, going green to red is a choice. Vast majority of the trades are going green. And you're going to see we have the highest win rate in the game. Not that we need it because every single week there's proven to be 1 to 2 1000% gains, which literally offsets all the losses. Every single week there's usually like 25 trades. If we had like 5 losses and 20 wins, a couple wins offsets all of those fucking losses. Literally just one win, 1000% gain offsets all the losses. So if we're making 25 plus trades a week and say there's 5 losses and every single week there's a 1000% win, how could people still be red? Are they not getting in where we're getting in and getting out where, like, how the fuck could still people still be red? One win offsets all the losses. If they took all the fucking trades, they'd be net positive every single fucking week. Losing's genuinely a personal fucking choice. So wake the fuck up and start fucking winning. I just showed to you how you could have been extremely profitable with a 50% win rate. And then before this, we had a 40 plus win on ES, and I'm waiting to make another trade on fucking futures, man. It's like, dude, the game plans are so easy. Like this shit, man. Just look at this. Oh my gosh, dude. This fucking look at this, man. This like V fucking U fucking W shit. Spike. Come back down. Fucking rally. Like, dude, this is one of the outcomes for tomorrow. Y'all motherfuckers need to wake up. It's bound to happen. This fucking breakout's bound to happen. Hell, if it's reacting bullish to 690, I might be a professional and take the trigger first before 685. I might do it. It's just I have to try to lead people in the right direction. In terms of beginners who don't know how to confirm all this shit and trade it fucking perfectly. Like, if we form support above 690 for a couple hours and react to bullish as fuck, I'd tell the beginners, dude, just get in on the fucking breakout in and out and then try to put it 692 to 695, right? But 685 is the best thing you do. But look at this, man. Market signaling that it's really trying to fucking ramp up above that 690. Look at this. VWU fuck, breakout, drop, retest, break higher. VWU fuck, breakout, retest, drop higher. Just look at this pattern. Very, very strategic, man. Look at the shape. You see how this shit drops like that? You see how this shit drops like that? And then it pushes fucking higher. Now it can drop right back down. But then look at the other side of the equation. We could also be right here, where the shit goes like that and then fucking rallies. Shit went like that, then it fucking rallies. So it's just a matter of time. Give it some time. If it's consolidating and breaking above 690, it rockets first. If we go below 680, 650, shit hits the fan first, then we buy calls at the oversold levels. So technically it's considered bullish as long as we're above 689 mid. 687 is a make or break. Market's a little bit fucked up right now. But in terms of the fucked up, one thing we do know is within time we will be breaking above 690. So best things you could do, wait for best confirmations on calls and at the higher level and wait to automatically buy calls at the lower level. And if you can't be profitable at 50% win rate with that, then either don't trade or just buy calls at 680 fucking 5, motherfuckers. I'm giving you every fucking thing that I fucking got, and that's what this shit is fucking saying, man. So give it some time, wait to see how it reacts. Join our group. It's the first link down below in the description. You're gonna fucking love it. You're gonna print nonstop. With that being said, I will see you guys within the chat. We're prepping for a futures trade.